All right, everyone, welcome to the 405 report. I realize this time may not be the best. I'm still feeling it out. Based on some feedback, what I'll probably do is aim for 405. On days I'm busy and I can't do it, I'll probably aim for 8 or 9 p.m. Eastern. That's the time I used to do my webinars a lot, and that seemed to be pretty popular. So going forward, my first priority is 4 p.m. Eastern. If not, then 8 or 9 p.m. Eastern, and then if not, we'll figure it out. But I think that's my lesson of today. But anyway, let's get started. A lot to talk about today. I like to say I'm an A+ coach, but as a player, on my best days, maybe a B player. Today I was a D player. The only reason I didn't get an F was I made money, which I guess speaks to my experience level and just where I'm at in my trading evolution. That a lot of my really bad days, in my opinion, where not traded that great, I'm still making good money. Not good money, but like making money. But anyway, if you recall the commentary I posted over the weekend, my weekend commentary, just to go over how we walked into today. Let me just zoom out for a second. You recall trading range, 250-point trading range since last month. We pretty much opened right at the top. Same for the NASDAQ. So doesn't mean well, now we know we failed, but doesn't mean at the time, it doesn't mean we failed, but it wasn't looking great for upside. So just want to remind people where we were at going into today. Anyway, let's zoom back in. So what happened today? Today was an interesting day. So overnight, we closed We closed like right around here. Overnight or Sunday into Monday, we rallied decent. And then, we kind of trickled off, over the Europe hours and the morning hours for us. And, this was the open. No, that's not the open. This was the open. So anyway, we kind of was trickling lower, and I'm like, gap up into resistance levels, basically 3,900 to 3,950 was my big resistance zone. I posted over the weekend, I think we're going to see a 39 number before the turn. I think it just makes the most sense to trap everyone, to really see that. So in the morning, XLF gapped up and was selling off a little bit. VIX, VIX was kind of maybe not really making a move. I saw some different things. I saw that the DAX was selling off in the morning. Some indicators were not looking great. However, in the morning, the NASDAQ was actually, quite relatively strong. And that should have been one of my indicators to maybe chill a little bit and wait. Because usually when the action or the indicators don't perfectly align or almost perfectly align, that usually means you're either early or you're wrong. I always say this a lot. It's like, if it's not happening for you or if something's kind of off, it's usually because you're either early or wrong. For us who trade options, especially for me who trade same day expirations, early can be bad. 5 minutes early, not so bad. 3 hours early, bad. So anyway, so when we had that first dip below this kind of pre-market low area, I got in puts here. I think I got the 38.65s because I thought we could gap fill, right here. See 38, 60 to 65. I thought we could gap fill from this because we've seen that before a few weeks ago. Up here when we were at 39.50, this was June 28th. See that? I didn't necessarily think we were going to get this big trend down there, but I thought we could get to similar action. So, but like I said, some of my indicators were not perfectly aligned. So we got down here and then we started chopping. And if you saw what I posted over the weekend, is 11 to 1 p.m. is terrible for SPX entries and holds. Makes sense, lunch hour, so it's so when I got in my entry just after 10, I was like, I think I got to here or somewhere here, and I was like, you know what, this is holding. It looks like it's holding this 38.85, 90. It's really choppy. The indicators are not aligned, and it's getting close to my 11th. I think I sold right at 11, right here. And some people were asking why am I selling? Is it gonna break? And I'm like, no, I'm sticking to my rules. I already kind of messed up here by getting in too early in the chop, so I sold. And it was a good sell for what it was. Again, obviously the market tanked later today, but I would have been burning premium for 2 more hours. I can always get back in later. you know, if you held through this and then got sold out, you would have lost $2 more on that. So I sold for a I think a $1.5 loss. I think it was, so down 1,500 to start the week. Not good. Okay, so that was that. And then okay, as we get towards the 1 o'clock hour, you see like the drop kind of started like around 12:45, but really the drop didn't happen. So we started trickling lower. And I have this rule that I'm kind of going to modify soon. I have this rule where I don't like buying puts at support. Now, here's the thing. Let's go back to that day before the CPI. And I want to say this because it was similar actually. Actually, yeah. So if this was my ES chart, there would be a line somewhere right here. At 38.50, 55 was my support level. Yeah, as you can see, it still is here. But we have this thing where we break below support, and then we do this little quick bear flag, and then the dump, right? So what happened today, we kind of, well, we didn't really break below. We were right there. We kind of did this, and we dumped, and then when we started making this push up, I was like, okay, it's not going to dump. That was a complete bear trap. But then right here at 1:30, it was like 1:31 is when I saw someone post it. The Apple news came out that Apple was slowing hiring, or cooling down on hiring, and that kind of the stuff that like a lot of tech companies have been releasing over the past month or two. But it's Apple. This isn't Netflix, who's not doing well. This isn't Tesla even. This is Apple. Like Apple, like never. Like last time we had a real Apple panic was like 2019. I remember. And then Apple rallied crazy after that, but it's Apple. So we started dropping, and again, because we were in my support zone, and I even thought 38.50 was kind of close. I was like, no, I'm not gonna buy puts here. And you know what? Also, I thought, and maybe I overthought it or just misthought it. Like I was thinking, like, okay, all these other tech companies are have already made this comment. So Apple making the comment is not necessarily new news. But I think what the mistake I made was this. If you recall, when I was pretty bullish on Thursday, when we were down here and everyone was bearish, and when the VIX is high, when you're way down here, less bad news, or even, not terrible bad news is good. But I forgot, because it happened in 2 days. I forgot we were back at the top of the trading range. So when you're at the top of the trading range, even slightly not great good news could be bad. The expectations and the price is different. When you're all the way near kind of lows of the range, it doesn't take much to rally, especially if events like CPI and stuff have already happened. When you're near the top of the range, this Apple news clearly had an impact. So that was kind of my mistake. Something, again, I'm always learning and trying to find truth. But today I kind of was like, oh no, we're gonna hold. The trend's been good. But I guess like the Apple news was significant enough. And again, because the price was near the top of the range, so not expectations, but like, you're expecting everything honky-dory for at least until the expiration or ECB or earnings later this week. So Apple making that announcement, I guess, changed the position, the sentiment, and where people were thinking. So that was my mistake. But anyway, when we got to 38.50, 55, I made another mistake, I would say. Yeah, definitely I would say I thought, okay, again, going along the lines of what I said earlier, I was like, oh, maybe this Apple news is kind of an overreaction, still, using the wrong context for getting real way up here. And I bought calls thinking like, man, if we just push here, we could rally back to 38.50, 85. And honestly, the risk reward wasn't even that great. I should have stopped myself, but I got calls stupidly, really bad. And then, we obviously didn't work. I sold that for a $3 loss because I was still convinced it was going to work for a while. So I held that one a little longer than I probably should have. So now I'm down 5K for the day. Terrible start to the week. But the problem was, we were still kind of holding the 38.50, 55 area. And I was like, here's where the problem is. I was like, here's where they maybe could trap you. It doesn't mean we'll rally, but it would have been one thing for me to buy puts here, even though there was some support levels. But here, this is a major support level, big level. We had already dropped 40 points, so I was like, oh, I really can't buy puts, on this move. And it did kind of. And if you had bought puts down here, I think the 38.40s were like 4. They went to like, I think they went to like 1.5 or something. So like it would have been really hard to hold through this. But then when we got here, this is where I can't take full credit. My friend Trader X in the power trading room, Missing Links, a few other people, if you know them in the power trading room, were reminding me, it's like, oh, okay, if we retest this range, this 50, 55 area, and we fail, we could, dump a lot, well, relatively a lot, because we only had 30, 40 minutes left. We don't need that much bigger of a move on the SPX premium. So once we got to, I think, about somewhere between the end of this candle and the beginning of this candle, I got in the third. I followed my friend Shamik. Shamik posted the he's Trader X. He posted the 3840 puts, and I was like, you know what, I'm gonna follow that trade, because I think it has some, I was really hesitant, because once I get down to here, again, I don't like buying puts at support. I'm already down on the day and the week, so I'm like, oh man, am I gonna make this worse? I was like really torn, because I don't want to make a medium loss, I guess, for me, small medium loss. I don't want to turn a 5K loss into an 8K, 10K loss. But but when we were really struggling, because here, we were there was no good push off 38, 50, 55, big support level. And then when this kind of bear flag failed, I was like, you know what? We could see this range. This is my line in the sand. I'll talk about that in a little bit. So I got the 3840 puts. I thought they could go to here, this range, and look at that. We pretty much hit right at the bottom. But I sold half of them around here, right when we got close, and then half of them here. So I got them for like 3. I sold them for 7 and 13. And the reason being was I was down on the day. So because if this was my first play of the day, you bet I was going to hold probably to at least 38.25. That was kind of my original target. But because I was down on the week, I sold some here to basically, sold some here to basically lock in no loss on the week, and then sold the rest. So I was up 4K. So I went from down 5K to up 4K, almost a 10K swing. Very thankful for that. So that's the problem when you make other bad trades, or just if you're down, it kind of sets you up poorly, because not only are you potentially changing your original objective decision making because you have a loss, you're also changing potentially when you sell. Now, don't get me wrong, those sells were right, because given the situation I was in for my strategy, I wanted to guarantee no loss, and then once I got down to here, I wasn't going to be greedy. But had I not had I been flat and not had any losses, I would have definitely held it longer. And instead of being up 4K, I'd be up probably about 10K, and not the hugest difference necessarily, but for me at least. But that just shows you how, like, the first bad decision. Like, I know someone who was struggling for a while, and then he hit one earnings play and then was set. He went on a 2-month hot streak because he made 40K on an earnings play. And then he's like, oh, I made 40K, and he wasn't greedy. So he didn't push things. He's like, oh, great, I can be patient now. I don't have to worry about money for the next 3 months. So psychology and everything is a huge deal. Last thing I'll say, and you know what we've done. Oh, and one thing, we've done this a lot. If you look at the last, even the CPI day, like when we have this kind of last hour fade, like in the last 10 to 30 minutes, we'll rally. And I almost bought calls here. That's why also I was selling here at my big line. I almost thought about buying the 3830s for one, but I was like, you know what? I don't think today's the day. I don't think we're going to get up to 3850. I think we're going to get that push, but it's not going to be worth it. So the 3830s went from like 1 to 2.5, and I think they closed at basically 0. I mean, where did we close? I think we closed right at 38. Yeah, they basically closed flat. So it was a great, pattern recognition that, hey, once we get, to the last 10, 20, 30 minutes, at a major level to sell puts. Before I get into the one question and then a few other questions, just to go into tomorrow, honestly, I haven't thought about it too much because, I was out running errands. So we'll see if I not change my mind, but if I adjust my opinion later. But I will still stick to where I was going into the week, where 3855 was the first, decent support level. That's the bear market level. But 3800 to 3820, 30, like, see, like right here, if you zoom out, you see like right here, I don't know if you call it a pivot or whatever, but basically in the middle of this range, we spent a lot of time. We spent a lot of time in this area, and So basically, this is kind of my line in the sand, as I like to say, for tomorrow and the rest of the week. And what that means is, if you need a reminder, is I could see us rallying, I could see us failing, but if we fail below here and we don't reclaim, if we don't do a false breakdown and reclaim, pretty fast, then I don't know, maybe we'll see the low of the range, or we're at least going to start hitting lower, maybe 37.50. Or, and also depends on what we do overnight. Maybe we hit 38.50 overnight and then we start failing. Maybe we hold here. Like, there's so many scenarios, depending on what overnight does, there's like 3 to 5 scenarios out of that. And then what happens after the open, there's another 3 to 5 scenarios. So that times that, now you're at 20, 30 different combinations, which is why I can't give you anything more concrete, because I don't have the data yet. That's why I like to post updates on my Twitter in the morning, about 15 minutes before the open, because I have more data. Basically, the big levels at 38, basically like this whole low 3,800 range. With this market, it's hard to give like 5-point like level zone support. It's kind of like anywhere between probably here, but it could, false breakdown and reclaim. But I wouldn't want to go anywhere lower than probably 3,800, and then I wouldn't be buying unless, honestly, I don't even know if I'd be buying, but if we stick between 38.20 and 38.50 overnight into the open, it's going to be really hard to play either direction, because if we open like here, we're in what I call no man's land, where resistance is kind of close, support's kind of close. What are you going to do? You're going to wait. So that's that. Yeah, like I said, not a great execution day by any means. I'm learning. That's why I share with you. Again, I think I'm a great coach, but as a player, but you can hopefully learn from some of my mistakes and my thought process. There was already one question, so I'll take that. I'm going to answer that question first, and then I'll open the floor up. So JB says, why do I trade off the 5-minute chart instead of the 15? Isn't it so easy to get faked out with the 5-minute? You're right. You're right. The shorter the time frame, especially for some people who I know who is trading 1-minute charts, that hopefully talk them all out. That you're right. I mean, but it's a trade-off. If you go to there have been plenty of times. So what I do is, when I do my levels after the market and before the, I'll look at every time frame, 5, 15, 30, 1 hour, 4 hours. I'll look at them all. But at this point during the market, I'll have the 5-minute up, and I'll occasionally like cycle through. But for me, it depends on you. For me, I feel like I'm experienced enough, and if I follow my rules, that's the thing. When I break my rules, that's the problem. But when I follow my rules, and I'm experienced enough where I would rather have a little more detail on the 5-minute chart, and hopefully my experience will help me avoid some of the fake outs. Because the problem is, I encountered, which I have tried trading off 15 minutes as my standard. My problem is with the 15, I'm not getting as much detail, and I'm missing a lot of things. I'm trying to give an example of if there was an example from, I think it was here, July 12th. Maybe the 15-minute will tell you something, but let's go to July 12th. Oh, what's going on here? What happened? Oh, wrong one. All right, July 12th. So if I'm looking at the 15-minute chart here, I mean, for me, this doesn't tell me anything really. I like, obviously when you get to like here, you see something, but if we go back to the 5-minute, this is just on the SPX. I like the 5-minute chart, because it gave me this big candle that then once I saw it failing fast, I could play this, for a quick, 2.5x kind of thing. So I like the detail. It's just for me. I'm not saying anyone else should be trading off the 5 minutes, but it's just for what I'm looking for. I like a little bit more candles, and also like if you follow me sometimes, I'll say like, I'm going to sell exactly at 240, or I'm going to look to buy around this time because of past comparisons to past days. 15 minutes, if I was only watching 15 minutes, I wouldn't have the details of some of the close of candles that aren't, based on 15 minutes. They're based on specific times. I always say like 240 is a key time potentially for a reversal if the market's moving a lot. 3 to 320. If you're looking only at the 3 and the 315, start and it just doesn't give me that detail. So if 15-minute works for you, I don't think there's anything wrong with that. Any other questions? If anyone wants to raise their hand or type a message into chat, I'm happy to answer any questions. I know a lot of people that I talk to that have been with, watching my videos for a while did good today. I know a number of people did well today. Basically, they were like, I followed your teachings, I didn't overtrade, I didn't chase, I didn't, I'm like, great. I'm happy that even though I did not do well by my standards, other people ignored me, or at least didn't get influenced by my poor execution and did follow some of the rules I laid out. Okay, I don't see anyone raising their hands or any more questions. I'm happy to wrap up. But thanks everyone for joining. Hope this was helpful. We have a question, but yeah, I'll answer that question in a second. But yeah, I love days when there's movement. At first, when last thing before I'll take your question. When we were like here, like when we were chopping here, I was like, man, I'm not even gonna do a webinar today if we chop. I'd rather just cover it tomorrow on a day, but obviously there's more to talk about. What other indicators are you use? So yeah, I have the SPX for to know where like gap fills are and that kind of thing. The ES, the NQ, the VIX, the XLF, the DAX, German DAX, the dollar, the bonds, 10-year bond yield. Oil hasn't really been that big of an indicator for me lately. It was for a while, and then high yield bond index. But yeah, usually mainly it's just the ES, the levels, and the price action. But today was a good example of where some of my indicators weren't aligned, but I was biased by some of my other indicators. But the ES action was so choppy that I really should just follow my gut and be like, oh, we have so much traffic, so many levels, it's choppy. Why am I buying anything here? So yeah, another question. Do I ever average up or down on a trade? Occasionally. I would say over the years and the months, I've been doing it way less. So it depends. Usually, maybe later in the day, it might be the case, but usually if you're averaging down, that means, well, we're wrong. I go back to what I was saying, you were either early or you were wrong. Averaging up, as in it's moving in the direction you want and you want to buy more. Not really. If I do, I'm sure I've done it, but I really shouldn't, because you're basically chasing on average up. But in terms of averaging down, here's my view on it. In general, no, you shouldn't, because again, I don't think so, because again, you're either early or wrong. And if you're right, you're still going to make money. If you're wrong, you're going to lose. If you're right and you don't buy more, you're still going to make money. And if you're wrong, you're going to lose less. If you average up, obviously you can make more, but you could also lose more. So my philosophy is I'm fine with the gain, and I'd rather avoid a bigger loss. That being said, the main scenario where I do average more trades and that I can think of is usually the requirement is I need to be up on the day or up on the week, in a good position, and then I see like a late day play. Like for instance, this is not a good example. I'm trying to think of it. Let me find a day where it was. I remember there was a day. Let me go here. This was the day. So this was a day where I actually bought more over time. So this was a June 24th. There was a Michigan sentiment. Basically, we had rallied off the lows off MOPX. You can go look into that. But basically, we rallied off the open and then chopped the whole day. And I bought early. I thought we were going to chop for an hour or two and then rally the rest of the afternoon. But I bought early. I think I got it like right here or something. And then we just kept chopping. But I'm like, given how much we rallied off the lows, with where we were, the fact that no one could bring this down the whole day, I was like, I just don't see us closing lower. I think we're gonna, and then this was a Friday, so I think all the late shorts or shorts we need to cover are gonna rally into the close. So I did average in the sense that I had good profits. And it was cheap, it was like, I think I added for like $1 or $1.50. So I think I added a little bit here. I think I added a little bit here, and I added a little bit here. And then, we got that, which was great. But usually I would only say I would average, add more if I'm at good profits. And it's a late day trade where if you catch the right entry when it, when the premiums drop, you can have a really quick rally pushback in your direction. The other time Where I did add more was 2 days. This was Thursday, so this was Thursday where I made that. I don't want to say great, but like back when everyone was bearish here on Thursday, I said we could close or hit 3,800. My issue here was I added too many layers, which forced me to not be able to hold through this. I probably should have sold this, rebought. I covered this on Thursday's webinar, but so the problem, again, that's another example. The problem with increasing your position is it leads you to sell too early or sell too, or not be able to hold. So there's a lot of downsides to averaging or buying more layers. It's tricky, when I do buy layers or average down, again, depends on your profits and depends on maybe you sell that first layer fast, so you're guaranteeing a profit and then you can hold the next layer. Optional question. No, all questions are good. Is trading your main income, and what kind of dollar range you experience? Asking because I really want trading to be supplemental as in deep tough. Oh yeah, absolutely. So I would say most of the traders I encounter on there are, they use it as supplemental income. They have a job full time, or they have a business, or they're retired. They have other forms of income or savings or whatever. Very few, I know very few full-time, this is all I do to make money, and that kind of thing. So yeah, this is what I do. I've been trading. This has been pretty much my only income for, wow, 3.5 years. So I did it for about 7 years. I did it part-time while having jobs. So supplemental income. And by income, I don't really mean supplemental income, because until I really went full-time, I blew up my account so many times. So yeah, I made money, but I just lost it back. So it never was really income. Anyway, what kind of dollar range you experience? Does that mean what's my buy size? What's my like ebbs and flows, ups and downs? Eric, can you clarify the what kind of dollar range you experience? I'm not quite sure what you're asking. I just want to make sure I'm answering the right question. Give you a minute to type that in. But yeah, it is indeed hard. It's hard. Oh, okay, I see what you're saying. Yeah, I'll answer that in a second. Yeah, it's yeah, trading is hard. And I went full-time, not because I was like, I want to go full-time. It was actually because I had a business for many years. And in early 2019, I covered this on past webinars, but I'll briefly talk about my business basically closed. So I wasn't gonna jump into another job or anything. So I'm like, all right, let me just trade. And so it wasn't like a decision of like, oh, I'm going full-time. It was, okay, well, I'm gonna do this for now. And I never looked back. So that's how I went full-time. In terms of my monthly, how much I make, it depends. I had a great first like 3 to 5 months of the year. Like January was so easy. Like let's look on the S&P daily. I went all cash. My long-term positions, I went all cash right about here. I was very fortunate. If you recall, Thanksgiving, December, we had that volatility. It's because I knew when the Fed was pivoting, I knew we were going to dump sometime in the next 3 to 6 months. And I was going on vacation for like the beginning. I was going on vacation, so I just sold everything up here. Wasn't the absolute highs, but I've been in my long term, I've been 100% cash. But anyway, January was so easy because we hadn't really, the VIX wasn't that high yet, so puts were so cheap. And also I had, we had those Vanna days. If you've been following me since, we had those crazy Vanna days. We had Facebook earnings. So like, I think I had like a 200K, like between the beginning of January and the beginning of February, I think I had like a 200K 5-week stretch. And then I think in March, I had another like 100K, because again, we had that epic, we had some epic first few months. The last few months have been hard. Really, for those who are in the power trading room, and I actually was remarking to someone today, I was like, man, it has been a month since I've had a big day. And that was the day of the FOMC here. No. Here. And honestly, that was only because I sized up. It was only a 4x. So I haven't really, I've been known in the past for my, 5x, 10x, but we really haven't. At least I haven't hit much. And you can see in this, I've done okay, but really most of my weeks are 5K weeks, 10K weeks, 15. And I like to average about 10 to, before the crazy volatility of this year, my goal was always 10 to 20K a week. No, wait, yeah, a week. Yes, a week. That was my goal, and about 50, let's say about 50K a month. I killed it the first few months, and I don't know if you know Eric. I just moved, and I was traveling a lot, like between April and now, traveling a lot of moves. So I was kind of taking it more chill. But anyway, the last couple of months have been tough for a lot of people. I'm gonna admit, tough. Like some of these big drop days, even like today, you notice I didn't kill it because these drops in the day come not out of nowhere, but they break supports late, and I'm just not ready for it. I'm still learning. Like I pointed out the day before CPI, and today I'm trying to learn this new like drop below retest. Maybe looking to buy puts if we break support, but it's hard. So like I mentioned, today I was down 5K and then I was up 4K. That's a 10K swing. I was very happy with that. Last week, I didn't make that much. I know I made a bad trade. I lost money on Monday or Tuesday, and then I did well. Man, on this last Thursday, the big Thursday where I called this reversal, because I oversized and I didn't sell up here, I actually ended up selling like down here. Still made money, but I was going for the home run and I oversized. I still made I think about 10K or so, but really, had I sold here for 10K, rebought, I think by my math, I should have made closer to 25, 30K. But like I said, I don't think I've had a 20K week since the week of June 15th. So it's been about a month. I've been, still making money, but like, I'm getting used to like, oh, I made 4K today. I made 6K today. I mean, it's again, I understand for a lot of people, that's a lot of money. I'm not saying it isn't, but I will admit that the last few months, I have to temper my expectations compared to the first 3 months of the year. Made so much money, but that's good because it set me up so well. And I posted, I think in April when I was telling people I was moving and all this other stuff, like I'm gonna kind of chill for the rest of the year. I'm trading way less than I was before, so I'm working on it. Was this another question? JB, yes, I'd like to be transparent. I'd like to post my entries. I like to post when I get out. I try to keep it like 60-40 good, bad, because I think I'm successful enough, though I should be mostly talking about the good. But yeah, no, I post when I post my entries, I post my exits, I post when I suck. I'll tell you when I make a bad entry, even though it makes money, like I've done, I want to be transparent. I want to help you guys, because I feel like, even if I mess up, you can learn from my mistakes. Or, a lot of people, more and more people who I've, coached and helped out are like critiquing me in the sense of like, what are you doing? Like you're breaking your own rule. Like everyone, it's so easy for me. It's so easy for me. I've always had this ability from a young age to analyze and critique other people. Like I was always the great proofreader, right. I'm getting off on a tangent, but anyway, it's really easy for me to be a coach and a mentor and critique other people. It's so much harder to do it for yourself. And this is true for everyone. So more and more people are telling me lately, because they learned and watched so many of my videos, I'm like, what are you doing sometimes, man? Like you're good most of the time, but like you sometimes break your own rules, or that kind of thing. But anyway, I'm going off on a tangent. Any last questions? This is a lot of good questions, a lot of good conversation. But yeah, I'll wrap up here. Thanks, JB. Thanks, Eric, and anyone else. Great questions. We'll see. I'm gonna try to do these 2 or 3 times a week. Depends on my schedule. Depends on if the market does something. But we'll see. That's a thumbs up. I'm assuming, Daniel, not a question. All right, cool. Thanks so much, guys. Have a good rest of the day. Good luck tomorrow. And we'll see what the market gives us. Have a good night, guys.